Brent fell roughly 17% on the ceasefire headline. For an oil market loaded with fear of a wider war, that is a violent move. And for a moment, the story looked easy. The shooting slows, the danger eases, oil drops, everybody exhales. But the response underneath that move pointed somewhere else. Iran did not answer with a clean yes to peace. It came back with a 10-point counterproposal, and the first 4 points were not minor cleanup. They were the fight. First, Iran was not asking for a short pause. It wanted a permanent, complete, irreversible end to military operations. Second, it wanted full U.S. sanctions relief. Not token easing, not symbolic relief, but the lifting of the economic pressure that has shaped Iranian oil sales, state revenue, and daily survival for years. Third, it widened the deal beyond a narrow U.S.-Iran pause by pulling in the broader regional battlefield, including allied fronts like Lebanon. Fourth, it treated shipping through Hormuz not as a technical detail but as a political one. Iran wanted formal rules for safe passage through one of the world's most important oil routes, and it wanted a hand in writing those rules. So oil dropped as if the crisis had suddenly become manageable while Iran's opening terms were still arguing over what peace would even mean. Not just fewer missiles, a full end to war, sanctions lifted, regional fronts addressed, new terms for ships in the Gulf. That is not a simple peace dividend. That is a much bigger negotiation. The headline and the underlying reality were already moving in opposite directions. The market could price relief in a morning. Diplomacy still had to answer the hard part. What actually had to move before cheaper oil made sense? Those first 4 demands exposed the system underneath the oil move. This was never only about whether bombs stopped falling for a few days. It was about what had to change before either side could call the crisis over. Start with the first demand. A permanent end to military operations sounds clean until you ask who defines permanent, what counts as a violation, and what happens if fighting restarts through another front. That is already bigger than a ceasefire headline. Then the second demand raises the price. Full sanctions relief meant Iran was not treating peace as a military question alone. It tied peace to money, trade, oil sales, state revenue, and the whole pressure campaign built around sanctions. In plain terms, the war did not really end if the financial squeeze stayed in place. The third demand widened the map. This was not a narrow bargain between 2 capitals that could be solved in one room. By pulling in the broader regional battlefield, Iran linked the pause to allied fronts and nearby pressure points. A quieter sky in one place did not mean a stable region. Then came Hormuz. Not just a line on a map, a critical artery for global oil shipments. And Iran was not simply asking for traffic to resume. It wanted formal safe passage rules under terms it helped shape. So the question underneath oil was no longer just whether tankers would move. It was who gets to define normal movement after the fighting slows. Put that together and the hidden system comes into view. Sanctions, U.S. military pressure, regional allies and proxy fronts. Shipping access through a critical energy route. Agreement on what normal life even looks like after the shooting stops. Those were not side issues, that they were the machinery that decides whether a pause hardens into stability or slides back into danger. That is why the first 4 demands mattered most at the start. They defined the peace gap itself. Before anyone got to guarantees, payment, or implementation, the 2 sides were still far apart on the basic meaning of the deal. And that opened the next hard question. Maybe none of this mattered because Iran had taken enough damage that it would eventually have to climb down anyway. That is where the easy reading breaks. A lot of people see heavy battlefield damage and assume diplomacy gets easier. One side gets hit badly enough, lowers the price, takes a narrower deal, and grabs breathing room. But the visible response did not do that. Reports pointed to damage across more than 20 provinces and major industrial assets. After the South Pars strike, some reporting went further, saying more than 85% of petrochemical export capacity had been rendered inoperable. Those are not marginal losses. In the simple version of the story, that kind of damage should force a smaller answer. Instead, the answer stayed politically heavy. Iran did not come back with a short request for temporary calm and humanitarian breathing room. It came back with terms aimed at the rules of the post-war environment. End the war for good, remove sanctions, widen the deal to the regional battlefield, shape shipping rules, and keep going from there. The position was under pressure. The ask did not shrink with the damage. That breaks the comforting shortcut. Battlefield pain does not automatically turn into diplomatic surrender. Damage does not automatically produce a bargain both sides can sell. Sometimes it hardens the fight over what comes next, because the side that took the hit wants stronger guarantees, bigger compensation, or a broader reset before it calls the crisis finished. So the ceasefire starts to look thinner. It may have lowered the immediate temperature, it may have reduced the chance of instant escalation. But lower temperature is not shared agreement, and by then the market had already erased a large part of the war price. That is where the back half of the proposal turns heavy. If this much damage still did not produce a visibly smaller ask, then the later 6 demands were not diplomatic packaging. They were the bill, the lock, and the political pain attached to any real settlement. First came the money. Reconstruction support and reparations means someone has to pay for what was destroyed. More than 20 provinces and major industrial assets were reported damaged. Once compensation enters the deal, peace gets a price tag. The argument is no longer only about stopping fire. It is about who writes the check, how much, and under what terms. Then the timetable hardens. Third-party guarantees and a dated implementation schedule mean the deal cannot just be announced and admired. It has to be monitored, sequenced, verified, and protected. Who guarantees what? On what date? What happens when one side says the other cheated first? A headline can move oil in seconds. A guarantee system takes time, trust, and outside actors willing to carry risk. Then the political cost rises again. U.S. force rollback, sovereignty recognition, and detainee exchanges push the fight into territory that is harder for every side to sell at home. Troop presence is not just hardware, it is leverage. Recognition is not just wording, it is status. Detainee exchanges are not paperwork. They carry symbolic weight, domestic anger, and bargaining power. The later demands did not add detail. They made the settlement more expensive, more fragile, and harder to enforce. And once that happens, the pressure does not stay in the negotiation room. It gets passed forward. The ceasefire headline triggered a relief trade. Oil fell. Lower oil briefly eased inflation fear. That gave markets room to hope for less pressure on interest rates, less strain on currencies, and some breathing space for businesses that depend on fuel, transport, and imported inputs. But if the core demands stay far apart, that relief can fade fast. Energy risk goes back into prices. Fuel costs climb again. Shipping gets more expensive. Factories pay more to keep lines running. Input costs rise. Then central banks face renewed pressure if inflation stays sticky. The dollar can strengthen as fear returns and financing tightens, and the squeeze shows up fastest in economies that import a lot of energy, including Japan, South Korea, India, and parts of Europe. By the time it reaches ordinary people, it no longer looks like diplomacy. It looks like a more expensive tank of gas, higher shipping costs, pricier food, tighter household budgets, and less room for governments and companies to absorb the next shock. That is how the cost travels. Each unresolved demand makes peace harder to close, and each unresolved layer raises the odds that the bill rolls back through the wider economy. The opening clue still holds at the end. Brent fell roughly 17% on the ceasefire headline, but that drop did not prove peace had arrived. It showed how fast markets will price relief before the terms underneath that relief have been tested. Iran's 10 demands changed the meaning of that move. They turned a clean-looking oil sell-off into a much harder question. Had the crisis really moved toward a workable settlement, or had markets stripped out the war fear first and left the peace test for later? The first 4 demands were the core of it. A permanent end to military operations. full sanctions relief, a wider regional deal, new rules for safe passage through Hormuz. Those are not loose edges on an almost finished agreement. They decide whether both sides are even describing the same destination. Then the last 6 demands added weight fast: compensation, guarantees, force rollback, recognition, detainees, a schedule. Somebody had to pay. Promises had to be locked in. Political risk had to be carried. And until those layers move closer together, cheaper oil is still a bet on peace, not proof of it. That is the rule to carry into the next headline. Markets can erase a war price quickly. They cannot confirm a peace price on hope. If the hard terms stay wide apart, the relief rally can unwind, and the cost comes back through oil, inflation, business pressure, and household bills. So the real test was never whether a ceasefire could calm traders for a day. It was whether the people inside the conflict were getting closer on the terms that define normal life after the shooting slows. Until that gap narrows, the crash in oil says less about peace arriving than about how badly the market wanted to believe it had.